Good evening, Ken at Tortoise Capital with the strategy podcast for May 30th, 2020. Take two. This time we'll record it. Thanks, Eugene. I'm going to describe, again, the learning journey that we're on for advanced hybrid trading. So there are two main lines of operation. One is operational and live trading, and that's us live trading every day, every week, every month. And we're using a variety of systems like monthly rebalancing, quarterly rebalancing, annual asset allocation, longer term position trading, and variations of those. We also do exclusively swing trading, a combination of mechanical systems and some discretionary strategies, and sometimes mixing those. And we also do exclusively day trading, where we focus just on systems that are intended to be used intraday and carrying no positions overnight. Well, it also turns out that hybrid trading is especially effective during chaotic markets and probably all the markets going forward. And hybrid trading is a blend of the best of, in my view, core and swing and day, or some combination of those, where an individual can find their own natural level and use the information that's available in each of those three disciplines to help them craft a personal trading plan that suits them and their objectives. And that's going to be different for each and every person. So operations and live trading is one of the two lines of operation. The second one is education. And so we have three websites that we use to support ongoing education. Campfire, where traders can post their trade frames and get feedback from me and from other attendees in the campfire if they choose to do so. And you have an opportunity to learn from going through the discipline of showing and telling your work. There's Basecamp, which is an area for study groups and to work together in a learning lab to develop accountability partners with people of shared interests, and then work to develop a small learning group. Basecamp provides an infrastructure to do that. The learning management system is like a big lecture hall in which pre-recorded lessons from a variety of broad and narrow topics are organized into courseware that supports the learning laboratory in Basecamp, which supports the show and tell that you do in Campfire, which supports the ongoing live trading that you can do. Now, about half the folks that are enrolled in the advanced hybrid trading workshop that's using Campfire and Basecamp and the learning management system, plus the Patreon distribution system to support live trading, about half of those folks are from the Van Tharp Institute. The other half are patrons of mine that support through Patreon at the platinum level that are learning advanced hybrid trading as we go. And so this is guidance really for everybody that's enrolled in that course or anybody that's engaged in this little journey. I owe you an overview of how this stuff all fits together. So here it is. So in live trading, I want you to think of that like the battle circle. That's how I think about it. And through the distribution channel of Patreon, I produce reports which support your trading. And then we debrief that trading. And that helps us carry forward continuations and themes from that day's trading, adding to it the new reports to develop our individual trading plan, which supports trading. So we go through this planning and preparing, executing and assessing in a continuous cycle. And people can choose to do core or swing or day or some form of hybrid in all of those. Now, in support of that, I'm doing these nightly strategy podcasts, which includes a closure report of what happened in the market and a quick look at the market health check and identifying the winners and losers for the day, and any lessons learned that really jump out at us from the trades that day. And I answer questions that I receive during the day, and I make those part of the mini lessons that I add to each nightly podcast. Those lessons that I am relating each day come from people that have asked me questions either from Campfire or Basecamp or the LMS or through emails. And so I use the Strategy podcast to connect the live trading with the ongoing learning of things that are of most interest to people that are trying to both trade and to learn. So if you're wherever you are on this journey, you're going to find your own level, and I trust you to do that. And my job is to provide you an infrastructure that supports your live trading and or your education, and the opportunity to either learn by yourself, because that's the way you like to learn, or in a small group through Basecamp, or in a larger community of practice, which is a combination of Campfire and Basecamp and the learning management system and whoever else you want to work with. So I trust you to find your level, and you're going to learn as much as you choose to work on. I mean, so I can't pull you through that, but what I can do is lead you to water. So I want you to think of the ongoing operations as being reports and then trading and reports and then trading in a continuous process, supported by the strategy podcast like this one. I've already done the closure report from Friday and covered some lessons learned, and I'm incorporating some Q&A, like help me understand how I'm supposed to be using these sites to learn. Oh, so this is why that's the lesson for tonight. I want you to look at Campfire as a place where you are applying the lessons that you've learned either from your live trading or from the educational sites, and you're setting up two different kinds of charts for us to look at of your work. One of them is a trade frame of planning and preparation where you've laid out your trading plan concisely on one chart that shows how you intend to trade that particular opportunity. And that's an opportunity for anybody else to give you feedback about that, to ask questions, to make clarifying assumptions, or really a chance to observe you at work. And it may be that the two of you have shared interests, and now in the exchange of feedback between two free peoples, you can discover an opportunity to partner together. And you might decide to do that inside Basecamp. You might decide to do that just individually through Zoom and however you want to collaborate. But I will tell you that if you want to partner with somebody to learn this material and develop some synergies and use the network effect, take a look at who's doing the work in Campfire. And if you want to work with that kind of a person, you have an opportunity to partner with them on the basis of the evidence of the work that they do. So one of the things that you can set into Campfire is a trade frame that demonstrates your current understanding of planning and preparing, and you'll get feedback from it. In fact, if you put those in Campfire, that gives me an opportunity to provide feedback that night in the strategy podcast, and you've seen me do that. I hope that there's so many in there that I can't get to them all in one night, and I'll pick representative samples. But that's making it easy for me to help you, is by you doing your homework and posting your stuff on the board around the Campfire. So the Campfire is the place where you do show and tell. And I'll tell you, like I've probably said 1,000 times, and I'll say it 1,001, the people who learn the fastest and the best are the people who reliably use Campfire to demonstrate what they know and ask for feedback. That's the best way to rapidly learn. It has never failed yet for that to be the case. Now, if you want a place where you can work together and exchange information and share files and have accountable meeting places and share resources, Basecamp is a perfect infrastructure to do that, because you have messaging, whiteboards, file sharing, threaded messages that can be searched and documented asynchronously. It's a fantastic place for you to do the kind of small group studying in accountability groups, and that's why I call it the learning laboratory. Very easy for you guys to collaborate inside Basecamp. The learning management system is the place where all of the lessons learned and the best ideas and the flashcards that come out of all of these other places get stored into individual lessons inside thematic courses inside this large lecture hall. In the same way that all of these strategy podcasts for the last 3 months, every night, are being collected as individual lessons in course number 104 in the lecture hall. That's the Corona Strategy Live Fire Workshop, that course. There's, probably 150 hours of live trading and lessons learned and live adaptation to a once in a generation event where we've had an opportunity to thrive on the volatility in both directions. And that was living history. And that's how you do it for that kind of an event. That's a pretty good course. And so that gets documented in the learning management system. And you can take that as an individual and just study the lessons and make your own notes and do your own trading plan and take away from it whatever you wish. And that's one way you can find your own level. And that's fine. That's a good solution for a lot of people. Some people want to do small study groups. Some people want to use Campfire as an opportunity to show and tell. You have the opportunity to do any of those. There's no one right way to do it. There's only your way to do it. And my job is to provide the infrastructure and support and the connectivity and the network learning effect, and to continue to do my best to support you on your educational and operational journey. But if you want coaching feedback, the way you do it is you put your trading questions in context in the trade frames to show planning and preparation, and then in the closed trade report where you show the results with your assessment of your own trading. What lessons did you learn from that? I can't really give you any feedback on what lessons you learned from it if you don't post what your lessons learned are. And that actually is where you're going to get the most value out of the feedback as you learn to self-assess and to look at your own trading through a coach's eyes. The way you do that is trying to be a self-coach. Well, the small group that you might choose to work in Basecamp is another way that you can get fresh set of eyes on what you're doing. And maybe that's a more comfortable way to do that. And you can look at all of each other's trades, not just maybe the ones that I have time to choose to, to comment on. I'll try to get them all as I can, but, I don't want to be the single point of failure on that. And peer instruction and shared accountability is a powerful force for learning. So, live trading distributed through Patreon, and the strategy podcast gives you the closure report, the lessons learned, Q&As from the trades that day or that week, and then some mini lessons. And some of those mini lessons come out of the Campfire case studies with commentary, and that is a way to provide coaching feedback through the mechanism of the strategy podcast, which is really geared towards current operations. Campfire is a way for you to develop your own learning through the work that you do on your projects, and it's an opportunity to see who else you want to work with on the basis of the exchanges that happen in the chat room. I can't make you do that. Basecamp is the opportunity to work together in a small group. So there's 2 projects for you in there. There's the Advanced Hybrid Trading Project, which is all the folks enrolled in the workshop and going through the 8 structured courses in the LMS. And all of you kind of started at the same time and are all in that together. And a lot of you know each other from the THARP Institute. And there's natural synergy and collaborative learning possible. And that Advanced Hybrid Trading Project is a way for you to just learn together and grow together. I've also given you guys access to the Coaching 2020 project, which I started last summer, and that's guys who have been trading in this way for a while, including the amazing Euro team, a bunch of guys and gals in Europe and Africa that are working together and are demonstrating what it looks like to use the power of Basecamp to form a study group. And those guys are knocking it out of the park. They don't even need me. But when they need me, they ask me questions as a group and I answer. And so one of the ways that they get coaching feedback is by using the Basecamp study group and asking me questions. Now, it seems like there's interest in an Asia and Aussie team that's starting to coalesce, and there may be a team that's aligned according to geography and time schedule and opportunities, and that could be smart. But any group that wants to get together and have your own little team collaboration that's in the advanced hybrid workshop, you can get that just by using Basecamp in that way. And then the learning management system simply collects all the best ideas and documents them into structured learning that can support home studies and individual self-paced learning into courses. And those are all lessons that are created from important moments in our trading over the last 20 years. So when I speak about the battle rhythm, these are things that happen every day. We have daily trades going on, and there's daily campfire commentary to the extent that people use campfire commentary. I had somebody go, well, there doesn't seem to be all that much discussion in there. Well, I can't fix that. I'm not going to try to fix it other than just saying, if you want to get better, you'll use campfire the way I just described. And the guys that are using it in that way will tell you that it's a very high signal to noise ratio. There's not a lot of chit chat and trying to synchronize their trading opportunities in the moment. It is a place for you to come back from your trading and show your preparations for the next trade and then show the results of your trading. It's not a live trading room where you're following me and my trading. That's not what I'm trying to do. If I wanted to do that, then I would do that. That's not what I'm going to do, and that's not what I'm trying to do. This is a place for you to collaborate on the live work that you're doing. The other thing that happens every day, and I'm just going to keep doing this because it's sustainable, are these nightly strategy podcasts. They're about ready to become more efficient now that I've built out the hybrid trading course, except for the response to questions and answers that are going to come up this week. And so the nightly strategy podcast is going to become more efficient and more operational. And then every day, Patreon distribution is how you get the daily reports and the weekend report. It's places for me during the day to provide commentary on things that are emerging and to have paper trail and a documented evidence of those things. And it's where I put the YouTube link, which is a replay of the nightly strategy podcast for people that can't be tuned in but want to get access to that. That podcast replay plus all the little commentaries from the strategy podcast get archived as a daily lesson in the learning management system number 104, the Corona strategy course, the living history. Now on the weekends, the weekly report looks like this. Friday night, I do the weekend report, which is Friday's close of business report for Monday, but also updating the weekly themes for the longer term systems. And then that produces that mungasso of a report that comes out on either late Friday night or early Saturday morning. I don't go to bed until that's done. And that gives you all day to review that report for those items that are of interest to you. And then if you really want to learn, you should go through that report and come up with the things that you notice and then listen to me on the Saturday night report review that I'm about ready to do. And then you can look at these areas. Where did you see something that I saw something? That's reinforcement. Where did you see something that I didn't say anything about? That's a good question. Maybe you're looking at different areas, or maybe it didn't hit my radar, or it's not my priority, but that's an interesting area where maybe you're finding value that I didn't see, where it supports the kind of trading you want to look at. And maybe I saw something that you didn't see, and maybe that's an opportunity to ask questions or to reflect on other areas of value in that report that maybe you're not seeing or just want to file away for later. So If you want to get the maximum value out of that report for learning and developing new skills, then review that report that comes out late Friday or early Saturday. Get your trading plan together tentatively. Listen to me read through the report, and then do the compare and contrast, and that will accelerate your learning. If you just want to support ongoing operations and just pick up a handful of ideas that I produce, that's absolutely fine too, and that's a very efficient use of your time. And then Sunday, what I will do on these Sunday night podcasts, I like the way it worked last week, and I'm just going to keep doing that. So if Saturday night is planning and an opportunity to look for good ideas or interesting ideas, Sunday is the day to have your trading plan ready for the week ahead, and then we will build out some trade frames. So if you post trade frames by noon on Sunday in Campfire, I'll review them Sunday night, and we'll have a very high signal to noise ratio where we're going to be looking at trade frames that are nominated by a bunch of people that are studying these ideas, and that's going to be a very efficient way to get some good trading ideas. If you want to post those trades and then get feedback on them, and that's your contribution to everyone else's learning, you're going to learn a lot by doing that. If what you want to do is kind of sit on the observation deck and look and listen and then apply and be a silent partner, that's absolutely fair too. Why not? You don't owe anything other than whatever you want to do. So that's sort of the virtuous cycle for days and weeks. And that's the battle rhythm that I'm going to maintain. Friday night reports, Saturday evening report review, Sunday evening trade frame review, ready for Monday. So you get the routines day and swing trading, Monday, Tuesday, Wednesday, Thursday, and then Friday you finish up, and that's kind of a special. Friday night report and reset, Saturday night planning, Sunday preparation. Now the monthly battle rhythm is something like this. If you want to do a personal performance summary, you've seen a number of examples of those. Post it in the chat room, post it on Patreon, where guys are summarizing their once a month performance. The guys that do that are learning extremely fast. And it turns out that the guys that do that are also the guys that are using Campfire to learn these techniques quickly. They don't need me to coach them. All they need me for is accountability and discipline. And they fill out those reports, send them to me with their insights and feedback, and I give them some insights and some things to consider, and off they go for another month. And those guys are knocking it out of the park. The Euro team, when they feel the need, puts together a set of questions on behalf of the whole team. Like if there's a question that the whole team can't get their arms around or are looking for insights, they just send me some questions and some context, and I give them an answer to the whole group, and then off they go until the next time they need advice. Now, if you're in the advanced hybrid trading workshop now, I'm going to give you ongoing Q&A support through the end of December as a, as support for taking the risk of taking on that course. And so that's like the access to Patreon, Basecamp, Campfire, and the LMS through the end of 31 December. By 1 January, you should be able to make a decision if you want to continue through a Patreon subscription at a level that makes sense for you. And those are these. The Steele report says, look, I'm not really in need of or interested in the learning and education side. All I want are the daily and weekend reports, and that comes in at a low cost. If you want access to the chat room, Basecamp, and the legacy courses, then you can sign up for bronze, silver, or gold at $100, $200, and $300 a month. And if you're in the bronze, it's because you're just interested in the core material. If you're silver, it's because you just want to focus on swing trading. You don't need the day trading. And gold, if you want to do the day trading. And gold gives you access to the other ones. Silver gives you access to bronze and so forth. And so bronze, silver, and gold, you're all going to keep chat room and Basecamp and the legacy courses for day trading and swing trading and the core trading. Those are good to go and are locked in. If you want the ongoing learning management system and the evolving courses, then that's the Platinum. And you're going to get access to all the courses that are in there and all future courses that I design. But what you don't get are the specialty courses where other course authors that I've mentored and helped develop are putting together courses that they run, like the options course and the Forex course. That's their course. I'm just hosting it, and I've helped them with the design. But the library card from Platinum doesn't give you access to those, but you do get those at a pretty good price if you're interested in those specialty courses. You can also just get those as a la carte. Like, hey, I don't want the bronze, silver, gold, and platinum. All I want to do is just get the reports, but I'm interested in the options course and Forex. Well, those are self-contained courses, and you can buy those a la carte. So that's the basic structure of daily, weekly, and monthly battle rhythms. So that's what I want to say about that. Shifting gears now to this is the Saturday night weekly report review. So here we go. So last week I showed a couple different ways that you might take notes. Yeah. Oh, Eugene makes a point on the upcoming price changes in September. Yeah, I think the bronze and silver and steel are not going to change. Gold probably won't change, but the LMS access is going to go up because that is just criminally inexpensive. There is so much in there that it's ridiculous. That's going to go up at least to 500. It may go higher. And then I will tell you, whatever price you lock in, whenever you decide to become a subscriber, that's your price for life as long as you're a member in good standing. I'm not opposed to the idea of the Platinum LMS going up to $1,000 a month or $10,000 a year. But if you're signed up now at 400, that's your price per month forever. That's the way I operate. I'm not going to change those prices before 1 September, but on 1 September, the price of Platinum is going to go up at least to 500. So let's see here. Let me find the screen to make this larger. Okay. So this is the weekend trading report for May 30th, 2020. The market is in sideways normal conditions. I still owe you the training aid, and I'm going to get that one done tonight that describes for each of those 9 boxes what the implications are for core, swing, and day trading. Like right now, it's sideways normal. So in the core, what does that mean? No change. You're going to maintain your positions according to the system that you've chosen. Your trailing stops will protect you. The blended monthly rebalancing may prevent you from starting a new position on the basis of whether or not that thing is above its 4-month moving average. But the rules of the system account for what to do in each of those 9 boxes for the core. On swing trading, a sideways market has no advantage for overnight, so don't be in a hurry to try to turn day trades into swing trades. Look for opportunities to do that on an individual basis, but as a matter of policy, you should not be in a hurry to try to get maximum exposure to your swing portfolio in sideways markets. And you should be ready for opportunities to take swings in both directions. Normal volatility in sideways is unusual because normally what you're going to see is a decisive move begin in either direction to either go bullish or go bearish. It is unusual for the S&P to remain tightly clustered around the 200-day moving average for very long. usually within 2 weeks, it gets resolved directionally. As a way to check on that, go pull up a 10-year chart and look at the 200-day moving average with a big red line in the middle, and then take a look at what happens to price when it comes into the 200, and you'll see that it may muck around there for a little while, but usually within a couple of weeks, it makes a decisive move in one way or the other. Then you will see volatility move, the volatility classification go back into volatile, and it'll either be bullish or bearish as that run begins to unfold. Then the swing trades that you may have started in the sideways could really begin to unfold. And that's where you start building your swing trade exposure in the direction of the primary long-term trend. And that's what sideways normal means for core and for swing. Sideways normal is a beautiful time to maximize your intraday trading with no overnight risk, because you're likely to see large one-day moves as things drift to one end of the channel or the other, and then make sharp moves back to the Bollinger Band mean, and then you get large one-day directional moves, but which don't lead to extended multi-day swing trades. So any sideways condition and all volatile conditions are optimal for day trade opportunities. So that's what sideways normal means for core, swing, and day. Using the multi-time frame NDX, we can see that the 10-day and 30 days are significantly overbought. That's a strong sign of short-term momentum. And the 3-day cycle is still pretty strong at 75. So that little bit of a sell-off that we had on Friday was not enough to really put that at risk. It looked more like raising some cash going into a weekend in response to some pretty good trading opportunities earlier in the week. Plus, there's enough social, political, and economic uncertainty happening in the news that is making intermediate and longer term traders sensitive to a bird in the hand and making bank, rather than having great confidence in our ability to predict which direction things are going to go. The longer term indexes of the 90 and the 270 are at 71 each is a sign that there is a strong belief by long-term holders in the status quo and the return to bull markets, and that helps account for the strength of that recovery, fueled by 10 to 15 trillion in fresh new magic money. It's amazing what magic beans will do. In the market mosaic on the right, you'll see that we're at the high end of sideways at 1.48%. So if it gets above 2% above the 200-day moving average, that'll become bullish. So we're very close from sideways to getting it back into bullish territory. And then you're going to see longer term people beginning to cycle money back in now that we're out of the hole. The ADX was at 13 last week. It is now at 15.6, and it's still neutral. And we know that 15 is the boundary between abnormally untrending and the beginning of new trends. So this little half step in the direction of the bull is leaning towards a bullish recovery right now. That's possible. By the same token, that same social, economic, and political chaos could very easily become civic unrest spreading across the cities, activating the National Guard, and disaster. So that would certainly undermine the short term. So that's exactly what a sideways normal feels like. You can make a strong case for the market to go in any direction, and that means it's a critical state. A larger than normal opportunity, or larger than normal probability of a larger than normal opportunity in both directions. There's strong evidence why it can go sharp and big in either direction fast. That puts us in a critical state. That's good for short-term trading. Another 10% came off the relative volatility. It's down to just a fraction over 2%. And that brings us back into the normal. 4 weeks ago, this was up around 2.8%. And now it's down to just a shade over 2%. The risk Z is at 1.15, so that favors the long-term risk on opportunity. So there are some swing trades on the long side that are worthwhile. You can see the 180-day time series look on that. So there were plenty of times in the last 20 days, you see it during that period of declining risk Z, there were plenty of times for the sharp volatility spikes to occur, but the market was resilient and there was enough buying pressure in the market indices to prevent that panic from reoccurring. So there does feel like there's opportunistic insurance being employed here to keep a second wave of panic selling from occurring. That's going to be stress tested, I think, in this summer. There's more uncertainty ahead. That's the way I'm ready to play it. And that's the way I'm going to believe up until November. Until we get through the election cycle, you can just clone what I just said and say that is the 600-pound gorilla that's just waiting for chaos to reemerge. How chaotic would that election become if Biden developed a health issue more significant than his onset dementia? I mean, what would that do to the chaos of the election? Unbelievable. Or a second round of increasing infections and a morphing virus. On the monthly market health check, this month is being turned out to be a decisive month up. It held support at the Bollinger Band mean, got through the edge of the river, and is now in the high end of the dragon. And the 10 period and the 30 period and the 90 period regression lines have all curled up. The fact that the 10 period is crossing over the baby dragon and is getting positive means that that little sell-off here is just about done. So I've added that baby dragon, if you listen to the podcast from last night, that describes that as a simple moving average 3 of the RL10. And one of the things that it does, it gives us an early warning to a change in the state of the MACD season. So right now you can see we've gone through a period of summer, fall, and now that the slope has turned up, this is telling us in the next bar probably that's going to turn back into the summer at current rate, and that's going to be really powerful. So that's 3 months up in a row and ready to break out of the dragon, which is that noise barrier, that's the yellow zone. And then the next target is up here at 320, is certainly within reach. And if it clears 320 in that PSAR, then it's back into irrational exuberance. That could happen. I think it's unlikely, but I thought this was unlikely. So what I think is likely or unlikely is not as important as being able to frame the boundaries between normal and abnormal. To me, this resistance level at 310 is really important. It's got to get through and stay above that in the month of June. Otherwise, we're back into muddling around, and it's at least down, tactical weakness down to 270 and the edge of the river on the south side still has it in normal tactical noise. It has to get through 270 and below to really kick in panic. So there's a lot of vulnerability just in the tactical range here. On the weekly, again, you can see we've gone through fall, summer, fall, winter, and now notice here when the RL10 in winter crossed over the baby dragon, and that gave us an early warning that the seasonality was likely to change. And that pretty soon we would be seeing things like the RLXDs and owls. So the owl is just about ready to fire on a weekly basis now. The beauty of this little baby dragon down here is it gives you, if you're tactically astute, especially on the weekly charts, there are ways that you can start taking advantage of these opportunities for day trading. When you have weekly moves like that, you can crush it with day trading and have no overnight risk. But on a weekly basis, if you just want to have wide stops and all that, it's not really until you see the PSAR flip, and then you might be tempted to start getting in here at 280 with a supported crossing. Now, it's not spring until it gets up to here. But that may be an adaptation that you're willing to look at. You say, hey, this would be a supported spring crossing if this were in the spring, but maybe instead of taking action on the weekly charts, maybe I can use this as an opportunity to get some long positions on the daily and look for supported swing crossings here and use that as a fractal alert. In the same way that you could use the crossing of the baby dragon here to start looking for the recovery moves in here. And that's exactly what we did with our day trading with the risk Z and the NDXs. And we were able to exploit opportunities all the way through this, what in retrospect looks like the mother of all buying opportunities. So the weekly chart is a nice way for you to start getting a sense of some daily opportunities, but through a swing trading lens, using wider stops and weekend reports. This gives you a way to start calibrating your expectations. Like when price was down here below the Z3, you could take an entry at Z2 with a Z3 stop, and you're free and clear. So those weekly Z-score boundaries make very compelling ideas for swing trades on the basis of trade location. And if you look at the RLFF strategy, you see this difference between the RL10 and the RL270. You can just take 1/3 of that distance between 230 and 310. That's about $90. You could just buy it here with a $30 stop, and your stop is basically you're buying Z2 with a Z3 stop, and you never look back. And then you can start using the weekly RLCO indicators and the Bollinger Bands and these various indicators we use to start fine-tuning your exits. You could even drill down to the daily charts and look at how to fine-tune that. The daily chart I've looked at and debriefed thoroughly on the Friday night podcast, so I'm not going to repeat that, other than to say we're pushing the boundary of the 10-day high, and if it gets through 306.5, 310 and 312 are really in order. Now remember, 310 was important on the monthly because then it's out of the dragon on the monthly. So if it gets above this Z3 excursion, dudes, it's off and going. And this little sideways consolidate and reorganize will have voted strongly to the upside. This was the first leg up. And if it moved from 298 to 306, that's an $8 move. It can go from 304 to 310 easily in a couple days. So we're in the summer, all systems go. Enough said. This is what the 30-minute chart looks like, and I've added this now to the weekend report so you can just see why the 30-minute bars are so darn interesting. This is what the S&P looked like, and if you go back and look at the Walmart supported spring crossing case study, that market itself was in the same position, but the Walmart move was even better. But you could have exactly the same trade on the S&P with that tight stop at the PSAR or at the Bollinger Band or the Dragon Belly, and you got the benefit of this gap up. And then that case study from last week is really a powerful way to think about what to do when that thing is outrageously rewarding on the very opening. And we had a really nice case study of how to manage that through the day. The other thing I want to show you is this moment right here, when it goes summer, fall, and then you get a supported fall crossing this way. Hey, you got a swing low and a higher swing low in the RL10, and it crossed the baby dragon, which was the early alert that an RLXD is coming. and an early alert about a change in season, tell me that you couldn't figure out how to frame a trade inside here at 300 with a stop down here at the PSAR at 290. That's $1. Or pick this one down here, $2. And then you have this move intraday happening, and you get 30-minute bars working in your favor. This day here was an entry at 1 p.m., and that's the afternoon move to here. You could just take that. That's a 2-to-1 reward to risk just using $1 as a stop. You don't have to have those tight stops that I'm using. But that might have given you the opportunity to hold something for the overnight trade. And bang, even if you didn't get the gap, that thing took right off and ran like a scalded ape. And that was Thursday's trade. Brilliant. And you didn't even have to hold that overnight. And now you saw in the case studies from Friday the opportunities we had on the short side, and then supported spring crossings on the lower time frames. So when you look at these kinds of patterns, you see a low, a higher low, another higher low. These little RLXD crossings are fractal alerts to things that are already in the spring on lower time frames and give you the ability to manage it a little more closely if you have the time to do that. But that's a recurring pattern, a series of rising lows and quick RLXD reversals and crossing the dragon. The dragon is your friend. This is beautiful because the dragon went from outside the river all the way to the other side of the river where everything held at Z-1, and the dragon quickly came down as your noise buffer and said, you may not pass, you may not pass, and it was keeping the man down until it broke through with power. And then you have a nice upward move. Opportunities abound. Blended monthly rebalancing, so we're getting back to the longer term core and longer term swing. The key leaders gave back some gains, treasuries and the tech. The SPY is handy to look at because the broader large caps and Japan, this middle tier was much stronger than the tech leaders and the safety play in treasuries. Treasuries are losing steam, and we talked about that last week this time. And look at some of the opportunities in the things that had just been horribly murdered over the last 3 and 6 months. Big winners for the whole week. So out of the ashes, this is like the Phoenix trade, if you want to call it that way. And you can frame those. And we saw EWZ as a way to fine tune that even better. See the same patterns here in the ETF 22. Big winners in industrials and finance, things that have been smashed. Whereas the big leaders, maybe this is a changing of the guard or just some low risk things that I guess are not going to go to zero. I guess the entire financial sector is not going to go to zero with the Fed producing double-digit trillions of free money through the banks for distribution. Maybe there's more room for finance to continue to work. You know who's buying the financial sector? Banks. You know what they're using for money? Free money from the Fed. You know who they're going to sell it to? People who need a lot more convincing. ETF 32 adds some additional global ETFs. So look at Brazil. So Latin America was nice at 5%. Brazil was twice as nice at 10%. That's such a beautiful trader intraday. It's a frog champion. It's such a beautiful swing trader. It's a champion. Brazil. I mean, Jiminy Crickets, guys. If you were only going to trade a handful of signals, wouldn't Brazil be one of them? Yeah, it would be. Walmart continues to lag the entire Dow 30, the only thing that's on a cash. Apple and Cisco in tech land. I mean, come on. Cisco and Apple, milk those cows. Goldman Sachs in finance and Morgan in finance. That's your financial sectors. Or if you just want to play the sector, look at FAS, the triple leveraged financial sector. The broad sector spiders, banks, regional banks, oil, gas, and equipment, aerospace and defense on rising concerns with China that we're manufacturing a threat where one does not exist. You got to have a threat like that to be able to justify the military-industrial complex, and that's been the winning game for the last 40 years. Why would you think it's going to change now? Home builders are showing some strength. ETF Max, look how volatility is decisively leaving the market. When they started that VTI pretend competition, I said, okay, I'll play. Give me the leveraged inverse volatility ETF, and I'll hold it for 6 months with my eyes closed. That one's doing pretty well, and going to get better. Other things that jump out, really, it's still more of the same. The Russell's mid cap and small caps are doing very well as speculators. This one, the cloud computing, SKYY, very interesting to me. World market model showing the decisive effects of gold, silver, and U.S. large cap tech. Mixed bag everywhere else. Japan is really doing well because they're not the U.S., they're not crazy, and they have figured out how to respond to the virus. Plus, they have a healthy culture. New strength showing up in XLK, the tech spider, that's green and white. And IT, the symbol VGT is green and white. Growth ETF, green and white. The Russell 1000 growth, green and white. What's losing? The T-bills and the corporate bonds. That is a rotation into equities and the tech leaders. The people who are going to win in the reconfiguring of society, no matter who wins the election, it's going to be technology large caps. Why? Because they have access to capital. They will get favored treatment. They've got the ability to buy up all of the struggling small cap and mid cap innovators with the free money from the Fed. And they're going to be the de facto means of hiring people on behalf of a government that doesn't want to do it because of a fear of socialism. So they're going to use corporate socialism, national socialism, and you know where that leads. But large corporations, that whole oligarchy and that civil, military, corporate, congressional complex is being reinforced with all that free money. Quick stats on ETF liquidity. The ones in green are both liquid and volatile enough for short-term trading. So the Russell, oil, energy sector, gold miners, biotech, oil and gas exploration and production is just a great little trading ETF. And then Brazil. Man, that's nice. This next one gives us the full up ETF2 report. So not only the ones we looked at, the extract of the top players here, but also the ones that are deeper at the bottom. So if you're, So if you want to be a bottom feeder, you can kind of look at these at the very low end. I'll let that come up on your screen. Sorry for flitting around so much. So this one here, the Russell 2000 Value Index, continues to be intriguing. It's a yellow and red, and that means it's coming out of the horribleness, and now it's just bad. It used to be terrible, now it's just bad. So that's evidence that it's pulling away from these other things that are horrible. Why do I like trading these? oil, EWZ, XOP, uh, because the bottom's in. I mean, they're not going to go to zero. Shifting to the daily report. So EFA and IEV are signaling on the short side for the overreaction system. Because these are strange times and we're sideways normal, I don't automatically short them at the open like that rule set calls for. But on evidence that the market is down and they're worse, I'm willing to start off with a hybrid trade intraday and then grow it into a short side swing trade. That's how I use the overreaction system to help me gain an advantage as a hybrid trader over a guy who just has to hold his nose and play the percentages and get short right now for the open. I'd rather just see it failing and then get on board. Let them be the first mouse. I just want the cheese, and only as much as I can carry. 10-day max pains I like looking at. These are the ones that are the most likely to either be bought on sale, like Goldman Sachs. It was a big percent winner this week, but it's still among the 10-day max pains, and JP Morgan. They're still far away from the 10-day high. There's more room for them to go. Devon Energy, General Electric, Citigroup. Man, nice. I should go back and just say also the min pains are the ones that are typically the relative strength leaders, so no surprise there. Cisco, Merck, Pfizer. I guess it's easier to believe in them on a continuation play because they're already strong. I just like the idea of buying Dow 30 companies well below their fair value as they're rising to meet their fair value, and then let momentum players come in and continue that move. On the Dow 30 tactical summary, what stands out for me is a handful of dojis. They were surprisingly low volume. The other thing that immediately stands out for me are Verizon and Cisco on the basis of they were the ones that had huge moves to the upside compared to their look back periods on 10-day, 1 month, and 3 month. They really stood out. And that means people were buying them particularly, not just the telecommunications and infrastructure sector, but people were buying Cisco and Verizon, and they were buying tech, and they were buying the market, but especially those two names. Intel was a leader. Merck was a leader. Yeah. On the ETFs, I see the large number of OR shorts that trigger for the overreaction short. So as part of that product improvement I talked about a couple of weeks ago when I was so self-critical, I have improved some of the standard work by defining a little bit more, a one-phrase summary of what all of those specific swing trade signals are, like the 5DD now. 5 lower closes, alert for both directions. It's a great setup, as an example. The NDX breakouts that come to my attention there, silver and utilities and healthcare. I like that healthcare is finally coming back into vogue. So I just on that basis alone, I'm going to go frame that trade. And remember, I'll go over the trade frames that you make and that you post in the chat room. That tool is as good as you want to make it. If you want to learn from the chat room, use the chat room. So I am going to go look at XOP. I like the fact that it failed. And it's been such a strong ETF, but it's been failing lately. In fact, it's down over the last 3 months, 6 months, and 12 months. 1 month, 3 months, 6 months, and 12 months. It's down. Only the 10-day is it positive on, so it's starting to run out of gas, if I might say it that way. Daily pinch and stretch, there are 3 symbols that are in the pinch status. Pfizer's getting close. but United Health and Microsoft and gold all are in the pinch status. I love the fact that Apple and XLB are all getting narrowed volatility, so they're almost getting ready to be abnormally pinched. That's good. The reason they're not super pinches is because they fell so much that their longer term regression lines are not in that pinch box. But United Health and Microsoft and gold didn't really experience that same magnitude of sell off. So the combination of lack of volatility plus uh, uh, relative strength make those really good candidates for continuation. I think Microsoft has just really quietly done a great job. Cisco is just going to run like a scalded ape next week. They had a good news report after the market closed, and there was so much buying pressure in the after market session that thing is just going to go. So I wouldn't be surprised to see a huge gap up in Cisco. I'm not going to chase it, but I'm going to use the hybrid frog technique on 1 minute charts, and that's my number one trading target in both directions in the first 30 minutes on Monday. Because of that news report and the fact that there's so much enthusiasm for it. Go take a look at the aftermarket charts on that. If you got TC2000, you can click on the inversion 20. They give you the pre-market and post-market view, and you can see all the things happening and use our lenses to get that done. I should also say, thanks for reminding me, Eugene, the price on that TC2000 bundle is going up on 1 September too. I'm telling you, that thing is gold. And that is an untiring decision support assistant. And that price is going up. It would not surprise me next year this time that that's going for 10 grand because I'm getting a lot of interest from that from hedge funds and RIAs who are looking for bulletproof strategies for all seasons. And they're going to pay for that with soft dollars. And so I have to respect that and properly price that and respect Danny's work on that. So between now and 1 September is your opportunity to get by far the best price you're ever going to see on that. Only a couple things test out well in the auto framer, Walmart and AXP particularly. Let me see if and Treasuries tests out well too. This is Treasuries. That's really nice, by the way, because what you're seeing here is really strong support. I mean, who doesn't love Treasuries at some point? And that PSAR breakout to the upside, and you can see those three prices to the upside. So if the market in sideways normal just decides to start the collapse now, what do you think Treasuries are going to do? The same thing they did back here in March and February, and that is, oh yeah, that's what they did the whole start of the year. So this little consolidation area here is really strong, and just recently they were up at 168. So you already have a 1, 2, and now a PSAR breakout here and an RLXD. It's not a supported spring, but look what's happening down here. Look at the RL10 crossing the baby dragon. That's the early alert that seasons are changing, and the RL270 is acting as support, and it's holding support right here and just entering the river. So your targets, the Bollinger Band mean. I'll tighten that up to the Bollinger Band far side of the river for not very much risk at all. So if you got long here, at 164, you could pick your own stop. If you pick the bottom of the Dragon, you're looking at $1.50, about a 1% risk. This bar's lower, the RL270, it's $2 of risk, $2.50. No, I guess that's $3 there. Sorry. If you wanted to pick you could already buy it right now at Z1 -1 with a Z2 stop. Just use a Z2 stop. That's $3.50. That's about a 3% initial risk, and your upside is clearly the at least the top of the Dragon at 170, so that's $6, and then the RL10 is 172, so that's $8 on a $3 risk. That's almost 3-to-1, with opportunities to add to it. I'll tell you, if it got through this little peak here, it would go all the way to the top. By the same token, if the market does vote up, and you're a treasury bond trader specifically, if it broke below 162.5, down it goes. So I'm going to hybrid frog trade the treasuries with a what size risk box do I want to use on this? So I'm giving you a little example right now of how to think about framing your trades for tomorrow, and how to take certain ideas that jump out and then rapidly doing some design thinking. So what if we just went down and looked at, we've done the 30-minute. What's that look like? Oh, sickening. Why am I missing the easy trades? Here's where it opened yesterday. It opened with a supported spring crossing. And so you got to take any exit you want in here. I'll give you, let's take half that gain. Or use the baby dragon as your exit. Oh, the baby dragon. I love you, man. Or you took the RL10. So you made that much on treasuries intraday. No brainer. Supported fall crossing, anyone? Walmart was the other. And that's the 30-minute. Just if you want to just make yourself sick. Oh, God dang. That's the 10-minute bars. Even that's a no-brainer all day. Did nothing but rise. And if you're paying attention, summer, fall, summer with an RLXD right here. So these little opportunities are fractal in nature. So when you see them developing on the longer term systems, think about using the baby dragon on the higher time frames as a way to give you alert that on the longer time frame it's going to be an RLXD in the near future and a seasonal change in the near future. Just drill down a factor of 3 or 9 or 10. Go from the 30-minute to the 3-minute, or the 30-minute to the 10-minute, and start framing those trades and see what you can do. Boy, you're going to be glad you did. And what you want are those things that are reliable swing traders, reliable day traders, the frog champions, like Brazil, Mexico, oil, Devon Energy, Alcoa, U.S. Steel, the Russell, the things that you see me trading every day over the past 3 months in this time of the virus. Let's go look at Walmart real quick. It was an auto framer. That's why we looked at treasuries. So Here's an auto framer. There's the 10-day high way up there. So I really think, that's such an anomaly that I'd probably take, maybe my realistic projection might be this price or even the far side. But even there, you can see that if you got a breakout above its 1-day high, or even just buying the breakout from the dragon and then reinforce with the PSAR flip, then if it gets through that price level, it will have negated all of the negative price action in this area here. So all of that price action in this orange box, or let me call it blue so it really stands out. All of that price action in that blue box is negated if it gets above this hump of the RL10, which is that PSAR flip. So even if you wanted to just put an alert and just say, look, if it gets up through that line, just automatically buy a swing trade long with how much risk? I'm going to show you 2 ways to estimate how much reasonable risk. First, decide how much gain you want. Oh, look at that. That would be almost symmetrical. So take 1/3 of that, which is roughly here, right? And say if I bought the PSAR and I had 1/3 of my opportunity as my manageable risk, I would be using the spine of the dragon. So just expand that a little bit and say, all right, I'll use let me get the lower part of the dragon here. I'll just pick the dragon right there. So I'll buy the PSAR breakout, and I'll tell you, if you want to just get a little better, buy the resumption of momentum. It takes out Friday's high. Buy it with half a position, put another half on here, and your target is here, and your far side target is there. But if it fails, if it opens in that yellow box, but then goes south, it's going to do that. And the target to the downside is down here. That's where it's going to go. So that's an opportunity trade. That looks very much like a hybrid frog straddle. So wherever it gaps open on Monday, I'm going to take that box and look at, that's a 50-cent box, roughly, maybe 70 cents. Maybe it's 50 cents. I bet you I could go to a 50-cent box on Walmart. And what happens at the open? That's not much different than what we did on the case study last week. In the great big scheme of things, if you take a look at where this Z3 is pinching, and you say when it's just mucking around sideways, that's a 20-cent box. So a 50-cent box is something like that. So you could put that 50-cent box on the open and then play it in either direction, and you're good to go. Onward. So we just looked at Walmart, Treasuries, American Express would be the same thing, but since we're in the market, and that's part of the finance. Do I have AXP on here? I gotta add. I'd have to add. I leave AXP to your judgment. Only a few squeezes, but ALL is interesting because we saw Leona crush that one in her 4 winning trades in a row from Friday, when she just crushed it with the collapsing dragons and the Z3 pinch breakouts in both directions. Go take a look at her trade case study from Friday, or listen to the coaching feedback I gave her in the podcast last night. She crushed it. She's an advanced hybrid frog trader. She's getting it done. Looking at the 4 seasons of MACD next in the daily. Things that come to my attention. Energy and gold are failing. I think the easier money is done in energy. So I'm, I think most of the gains that it's had in the last 3 weeks was from that overreaction to the price war in oil. Now that it's found its own level, that's going to level off. And now long-term demand, the suppression of long-term demand is going to just make it harder and harder for those guys to survive. And now you see most everything, excuse me, in the winter. No, I'm sorry, in the summer. So the ones that are at the strongest MACD Z-score, like in the green, those are the relative strength leaders. Morgan, Cisco, Visa, Boeing, Disney, American Express. Hey, 4 out of the 6 are in the financial sector. Finance. Make that part of your nutritious, delicious diet. I like healthcare here because it is just an early entrance into the summer. It's just starting to recover. Yeah. Look at that beauty. So this is XLV on a daily. And it's been dead money for the last 20 days. We were loving it on the way up. You can see that. And for the last 20 days, it's been just dead money in here. But Friday was different. Friday was the breakout. So I'm automatically going to buy that one as soon as it shows any evidence. So my big 3 targets: Cisco, Treasuries, Walmart, and healthcare. So 4 symbols in my big 3. I always try to give you, I try to over deliver, under promise. I really like the way that looks in healthcare right there. Some people would call that a cup and handle without any handle pullback, really, unless you count unless you were going to count this as some kind of handle, pullback and held support, pullback and held support, higher low, and the PSAR didn't fail. Price went through it, but the PSAR held, and now it broke out of, and it was above the previous Z3 excursion, which was a pinch. Dude, that's ready to go. And when it goes, not bad. And look what it doesn't have to get through much to beat its all-time previous high anyway. In fact, if this thing gets above 105, it's only 2% away. It's at an all-time high. Do you think healthcare is going to get more or less money in the next 10 and 20 years? More or less money in healthcare? I don't know. Which way you want to bet? I'll take that one. The multi-time frame NDX, this is the one that bright green are the ones that are showing those big powerful moves to the upside. Bright reds are the breakdowns that are the anomalies. That just reinforces all of the things that we just got saying. Look at that sweet action in XLV. A 3-day, 10-day, and 30-day breakout to the upside. I love it. The rest of this is kind of detailed market shenanigans and market details, nuances. You have enough raw material now to build your trading plans. I invite you to put your trading charts for planning and preparation into the campfire room by 3 o'clock tomorrow. That gives me a couple hours to look at them for the podcast. And that's everything I want to cover for tonight. We got some quality family time tonight. We're getting into the last section of the Avatar the Airbender series. They just lost the tactical battle against the Fire Lord. Now all the young ones are gathering together to try to rescue their parents and transition to the next generation. So this is a real passing of the guard moment in the final 10 sessions. Pretty good stuff. This Ken at Tortoise Capital, keep your risk measured and your powder dry.